Well, good morning everybody. Welcome to another webinar. Good morning George, Ashraf, Stewie. Good morning everyone. Good morning, good morning. How's everybody doing? Give me a yes if you can all hear me okay. Make sure there's no mic issues. And let me know if you can also see the screen. Oh, 3 thumbs up already, and I've only just started. You guys just must like the sound of my voice. All good my side. Morning Ian, Pete, Harry, Stewie. Yep, all good. Excellent, excellent. So this is YouTube Live, and what that means is there is usually a delay of around 15 seconds, sometimes a little bit more. So if you do type something in the chat, it may be a little bit of time before I can respond to it. But if you do have any questions, 6 thumbs up now, fantastic. If you do have a question regarding any of the currency pairs that I'm talking about, or there's something you don't understand, or there's a currency pair you want me to look at, please go ahead, put it in the chat, and I will answer it as best I can do. The purpose of this room is to review the opportunities that meet the rules outlined in the educational material at freeforexeducation.co.uk. So basically we're only going to take trades that meet those rules, and there are around 14 strategies that we're going to be looking at. First of all then, there is just one piece of news out, very minor piece of news, some GDP news out at 1:30. Other than that, there's nothing that's going to stop me taking day or swing trades here. So is there any trades that you guys are looking at? Is there anything in particular you want me to look at? And just while I'm waiting for your responses, I've got 10 currency pairs that I'm going to go through. I don't have anything that stands out, to be honest with you. There's nothing that's amazing out there. Just celebrating as well the 130 pip winner. Those of you that got the signal a few days ago, and we banked 130 pips on a double top on the dollar Swissy, I think. I'm terrible at remembering the currencies. I think it was the dollar Swissy. 130 pips we banked, so congratulations to anybody that took that. We also had a triangle that won in the night as well for 28 pips, so very nice night. It's lovely when they hit overnight, because when you wake up, well, the trade is done and dusted with. You don't have any emotions still hanging on with it all. So if we don't have any questions, I'll start off on the Aussie dollar. So I had no tech issues this morning, by the way, guys. I managed to fix Ninja Trader. If you knew, then we had an issue last time with Ninja not working properly on my computer, but that is now all fixed. So on the Aussie dollar, we had a channel that I've been looking at coming into structure highs, and I was waiting for some kind of entry reason. We haven't as yet got it, and we'll talk through the analysis. Now I do something called the full underwriting of the trade, which is basically we look at the higher time frame, which is the dailies, and go all the way to the lower time frame, so we get full perspective on what the market is doing and all the opportunities that all the time frames may offer. So on the Aussie dollar, this is our most recent main swing for me. So we had a move lower, a pullback, and then we had a confirmed break below, close below just here. So what that means is if I put a structure level on at these lows, we had a confirmed break below, close below, and we only just broke below this structure level though, and what that typically means is we tend to see deeper retracements. So this retracement here was expected, and if I just go ahead here and highlight the wicks from the lows to the highs, and I'm also going to put a structure level in at that level, we've actually come into a psychological number, so the 7,000, and we've just come into the structure level here, and we've also had a test here. So this would be an area now where I'd be looking for a counter trend move. Now I wouldn't be looking for a complete retest to the lows, because even though this is a trend, we only want to be in trend continuation trades when we have those shallow retracements and those long extensions. They're the higher probability. With this type of trend, we want to be looking for shallower targets. So left shoulder at an absolute maximum for me, this left outside return, possibly some internal structure as well in here I'd look for. So let's drop down to the 240 and take a look. And this channel, I'm not even sure if it's still valid, but the way it was looking was, if we draw it out on the closes of the candles, just like that. And there's a little trick for working out these channels, and if you just duplicate and move over, well, we've then had 1, 2, 3, and we haven't as yet come in for the 4th touch, which would have been up here. So with any channel, or any channel that meets my rules, I need a minimum of 4 touches. And if you're wondering if this doesn't counts as a touch, no, it doesn't. The reason being, it needs to go in order. So 1 on this side, 2 on that side, 3 on this side, and we never got the 4th touch here. And because we've drawn the channel out correctly here on the closes of the candles, it means we didn't touch here. So there's no selling opportunity for me. And if we just take a broader picture here of, are we going to get an entry? Well, if the market was just to shoot up in a straight line right now and hit the trend line, well, it's very likely we're going to violate the structure highs. So the way this is setting up is it's unlikely now that this is going to offer an opportunity. So let's go and drop down to the 60 and see if there's anything else. Now we do have a form of rising channel here. If you guys can see it, I'll just draw it out. And again, with any form of channel, 80 to 90% of the time it's going to be correct if we draw it out on the closes of the candles. So we duplicate it, move it down. 1, 2, 3, 4, 5th touch was up here. Couple of problems with this channel for me. There's no pole. We can't see where the pole starts. You could take it from here, but it's, you know, it could be here. It's a little bit weak in that respect. The other problem I have is this long wick just here. So technically we've only just made a new high with this instead of this. And what I like to see is that if this was the pole and this was the rising channel, then I like to see that we physically here make a new high above the first test. We make a new high. We make a new high. So that doesn't invalidate the pattern, but it's something to pay attention to, that technically the channel has gone like this. Okay, and with this being a weak pole, well, it's something we want to be a little bit cautious of. But in saying that, if we look left, does this come into any structure? Because we are coming into that 7,000 psychological number. Well, not really. We have this little wick and we have this wicked area here, but really the highs is what we want to pay attention to. So it's not going to be an opportunity for me. I think that's an example of a weak opportunity that in some respects, yes, meets the rules, but there are indications there why it would be low probability. Anybody got any questions on that rising channel? Is it actually something you guys are looking at? Just because it doesn't meet my rules doesn't mean it's not going to meet yours. It's the beauty of trading. Everybody's rules are slightly different. We all have a different perspective on the market, and yeah, at the end of the day, that's why the market moves, because we're all buying and selling for different reasons. A little bit of a trend here. Let me have a look. Pull back, move higher, pull back. We've moved higher up to this level again. Because we're approaching these highs, it just wouldn't be anything that interests me. So I'm going to scrub out the Aussie dollar channel. I had it marked down from yesterday, to be honest, but it's not going to be something I'm going to be actively watching now. So if there's no questions on that, I didn't have the Aussie dollar down as something I was looking at, but I am going to bring it over because we are down at this daily structure level just here. So I'm going to highlight from the closes of the candles to the wicks, and what we've done is seen a structure hold, and we did speak about this in the last webinar, and I said that we could actually see a retracement up to a 382 because we've come into a major daily level of structure. Remember guys, for me major is classed as the reaction that we see, and this reaction was major, and so we could see a pullback into this area. Now we can break down this area into 3 levels. We can break it down into the wicks, we can break it down into the candle bodies, we can break it down into what is called the last chance entry, which is also the wicks. And the wicks at either end, we're going to be looking for rotation patterns, so they are double tops, double bottoms and head and shoulders. And in the body, we're going to be looking for lower low, lower closes if you believe we can come back down for another retest. Let's go and take a look at the 240. It's my daughter's 13th birthday today, so I was up extra early. I had to do the review this morning. Had to have my coffee, had to have 2 coffees this morning to get myself going, and we opened, or she opened her presents before she went to school, and all her cards. She got something like €200, an iPad Pro, and about a dozen different presents, so she did very well. But it was her 13th. She's been so excited about being a teenager. So here on the 240, again we spoke about this double bottom in the webinar. We had a move higher, so we violated this double bottom. This was not a valid double bottom I could take though, even though it happened in our price reversal zone, which was in the wicks, which is a tick, which is what we need for a valid double bottom. We did not have the RSI confirmation on the first test here. We did not go oversold. However, if it's valid for you, you can now look for a pullback and something called a 2618, where we put on a fib from our swing low to our swing high, and you look at buying the 61.8. My concern is that we have not violated this level of structure, so this last level of outside return. So just to show you what I mean, explain this, we were in trend, we had a move lower, outside return, move lower, outside return, move lower, outside return, move lower, rotation pattern in terms of a double bottom, we pulled higher. Yes, we violated the top of the double bottom, but we have not violated any level of structure, okay? And that is what concerns me on this trade, even though my bigger prediction is that we're going to see a move higher up to this 382. So what I'd really like to see is, well, actually guys, we can wait for a few things. The first thing we can wait for is this. This gives us a 3-point move, and guys, if you've only just joined and the room's moving a little too fast and you're not too sure what I'm talking about, all of this is explained in the educational material on the website, forexeducation.co.uk. But what we can wait for is a 3-point move. So 1, 2, 3, and with the 3-point move, this would violate a level of structure. We can wait for a pullback into our outside return. Because my bias is that we're going to go higher, just simply based on the fact we've come into a major level of daily structure, then I can look for an entry within this zone. And then we can use our standard trend continuation tools. So they are double bottoms, head and shoulders, higher high, higher close. We can also throw a few other strategies in there as well. We may even get something like a flag pattern that sets up. So something like this, where we can use that as the entry. We can get protective stops. We'll play for a 127 extension up until our 382 target. So it's a good idea to not just analyze the market, but also think of all the things that could happen within the market, so that you're fully prepared mentally. Because I know that we could just simply pull back for a 2618. I know that we could put in a 3-point move. I know we could potentially put in a flag. I know that if we pull back for this 2618, if I wanted to get involved here, what would be great to see is if we put in another double bottom and we violated structure. Now that would be a trade I would take, because I would have tight stops and it would give me more confirmation, and I would play for a retest here, and then I'd play for a retest for that 382. Now I've thrown a lot of info out there, and there's going to be people at different levels. Did you understand that? Is there anything you would like me to go over? Oh, thanks guys. Yeah, she's 13. I can't believe she's 13. She's my eldest. 30, she's a teenager, and the thing is, she doesn't even look 13. She passes for 17, 18. I was back in England last year when she was 12, and we were in London, and it was Christmas, and we'd gone for a meal, and they asked if she wanted a glass of warm red wine, and I said no, she's only 12, and they just couldn't believe it, and she just doesn't look 13. It's ridiculous. Growing up, my eldest last week had his 10th birthday as well. Okay, Mark, if it went over your head, go onto the website and start off. I'm not too sure what level you're at with your education, but we have 50% of the educational material within the website is absolutely free. And the first bits, which talks about what a trend is, what a violation is, what a double top and what a double bottom is, all of that is absolutely free. It's got video tutorials and it's got examples in video format as well. And what I've just explained here is absolutely free within the educational material. So if you haven't, I'm not too sure if you have, but go and register. It's absolutely free. The chat system is free as well. So I'm on there pretty much most of the time, and other traders. Bob on, say you have a question you didn't fully understand. Please, can we go into this in a little more detail? So yeah, go ahead and log on there. It's free. So there is not a great deal else here for me. Let's go and take a look at the 60. I have been keeping an eye on this for a while, and again in the last webinar I spoke about this. We have a swing in the market, a move higher, a pullback. This was the move higher, a pullback and a move higher, and I spoke about a potential head and shoulders here where we could see a pullback. I would need to see a violation, then a pullback. This would be our outside return, and I would then look for a conservative entry, conservative targets. Just let me mute that, and I would then look for an AB equals CD pattern down to this level, which would actually come into a 61.8 fib, which would be your entry for the 2618 on the 240 time frame. Okay, so that's something else I'm paying attention to. So just going to make a note of the Aussie dollar. I'm just going to asterisk that so I can put it on my main charts later on. Let's take a quick look at the 15. I don't think there's too much here, to be honest with you. Oh, look at that little double top there that's occurred. Okay, simple trend violation rules here. We have a double top, it looks pretty, we've got a nice gap in between, the market has come lower. What is the problem with this double top? Why is it not a confirmed double top? Stewie, Aussie dollar CAD. Yeah, we're on the Aussie dollar CAD now, Stewie. What's the problem with this double top right now? Because it looks as though we've had a lovely break to the downside. If I was to put a structure level on at the very lows here, guys, what is the problem? What have we not yet done? No close. We have no break of structure. Yep. Okay, so this is a potential double top. It is not a confirmed double top, and there is a difference. Okay, we have held structure, and these are, let's just break this down. I'm going to move, I'm going to put another structure level on just here. Okay, now we want to be taking double tops if we're taking them aggressively here. So if this was live, and we want to be taking these aggressively here because we have a great risk to reward, we want to make sure that these appear at a decent level of structure. Now we've got choppiness here, haven't we? We've got very minor here, a long wick there, and then it's kind of choppy and a little all over the place, isn't it? So it's maybe something we want to be a little bit cautious about if we want to be aggressive selling the market here. But if we wait for a confirmed violation, we can then look for a pullback and that 2618. And again, Mark, 2618 is explained fully within the educational material. So just follow along as best you can do for now. And that could be a trading opportunity. But there is no confirmation. In fact, we do not get the confirmation until we come down and violate this level. So right now, this is nothing. This is what can sometimes happen, where the market tricks you into thinking this is a valid opportunity, but was it really good enough? Was the probability good enough? For me, it just wasn't. So we will wait. We'll go and take a quick look at the 5, but I don't think there's a great deal on the 5. Yeah, nothing here for me. Just junk. If you look at this, there's just nothing here for me. So maybe something to look out for on the higher time frame, but we'll wait and see. If there's no questions on it, I'll move on to the next one. Heard the phrase before, yeah. Okay, let's go and take a look at the euro yen. There is something I'm looking for, and that is an AB equals CD pattern. Now, these haven't been performing very well for me over the last couple of months, but AB equals CD patterns are very profitable for me, and I'm just going to explain why. Just let me catch up with the chat. Would price have to close below the long wick? Yes, Ian, it would. For it to be a confirmed break below, close below, it would have to violate that wick. I know that you're already registered. I haven't chatted too much to you, I don't think, within the chat, but that education is also free within the educational material. So go and watch it, trend violations, and then watch confirmed double tops and double bottoms, and we talk about the 2618. And so yes, it would not be confirmed until we violate that structure level, that long wick, which was part of the double top. Yeah, going back to the euro yen, AB equals CD patterns. I've done an educational material on this, and what I love to do with all my strategies is I don't like trading just one strategy. I like to have 2 strategies, 3 strategies within the chart, because what that does, it adds extra confluence, and then you can pick your entry. You can be aggressive with the entry, or you can wait for a conservative entry like a higher high, higher close, a double top, a head and shoulders, 3-bar reversal, whatever it may be. But because I've got around 14 different strategies and I've got very specific rules for them, then it allows me to add confluence to just simple patterns like the AB equals CD pattern, and I'm going to show you what I mean. So let's do the higher time frame on the euro yen. So this is our main swing up here, and I'm not going to draw out every pullback, but we had the main move which came lower. We saw a pullback, and then we saw a move lower. Now, did we come in to retest those lows? Okay, you may or may not be able to see this. Right here where my crosshairs are, right at the low of this wick, if you look left, this candle here, we did not come down to test the closes of the candles or the closes of the candles here. And what we've seen since then is we've seen a move higher, all the way almost up to the very highs here. Now this to me is a sign that we could actually be going bullish here, guys, because not only did we fail to come to retest the lows, but we've actually retraced right up to the very highs. So if you just think about this logically, this is the sellers in the market, selling the market, pushing it down, pushing it down. We're seeing some resistance, we see a doji, we see a long wicked candle, but it finished bullish, and then that was followed by a big higher high, higher close bullish candle, and then we moved higher. So at this point there was a battle that went on, and the bulls firmly won. But not only that, the bears couldn't push the market down enough to even retest the lows. Okay, so that's an indication that there is more buying pressure here than selling pressure. And while there is no confirmation that we violated this level of structure yet, this is something we want to pay attention to, that this is more of an indication, based on my experience, that we could violate this level. Now that information may or may not be useful to you. For me it is, because all it does for me is it gives me a bias. Okay, it gives me a bias where at the minute there's nothing, we're sandwiched in between really these two structure levels. But my bias is bullish because we didn't retest the lows. And sometimes it does come in helpful. Yeah, signs of consolidation. Yeah, this is consolidation, but again, because we came a few pips away from testing the closes of the candles, and my rules are that, targets are based on the closes of the candles, structure is based on the closes of the candles, and then beyond the closes of the candles we have the wicks, which is where I look for the rotation patterns. So that's my bias. Let's just zoom out though and take a bigger look. Something else you want to pay attention to is this big wick. Anywhere within this big wick here, the market could just see lots of buying pressure and we could see a rotation. So that's something else that we could watch for. So let's go and take a look at the 240. Okay, on the 240, this is what I'm paying attention to. This AB equals CD pattern. So with most patterns, I say this time and time again, repetition, with most patterns they have a leg, they have a pole, and right here we have a swing in the market, a directional move. And if we duplicate this and move it up, and then we put a structure level on at the very highs, just a little bit lower, look at what we're doing. We're coming into this major level of structure. In fact, I'm just going to highlight all the wicks. So simple pattern formation, AB equals CD pattern by itself is very weak, and if you trade all of the AB equals CD patterns with no confluence, well, the chances are you're probably not going to make any pips. However, if we add confluence, the first thing I like to do is, well, structure. Structure is by far what I use in my trading. It is the BN, it is the be all, but then I use additional things like fibs, psychological numbers, and the RSI to add confluence. So this is a major level because we saw a major reaction. Was there any other structure looking left? We've got a little test here, so and another one here, so nothing major, but this major test by itself is good enough for me to look for an opportunity. Yeah, equal measured move, same thing. This one is an AB equals CD pattern because we hit a 382 and we didn't close below the 618, so this is a valid AB equals CD pattern. So let's throw on some fibs. The first thing we want to do is look for an inversion. So from our swing high to our swing low, we're going to be looking for that 1618. Now we have fallen a little bit short. What we can also look for is an extension. So from our swing high to our swing low, it extends the fib, and we have a 1414 up in that area. Now when we get these two fibs very close together, they can be very powerful for me, even though the 1414 is actually quite a minor fib level. So not too much. We do have the 1618, but it has fallen a little bit short. Let's just remove those for the time being, and let's look for psychological numbers. There is no psychological number here. In fact, the psychological number for me is right here at this 12300 level. But that comes in just below the closes of the candles. And who keeps ringing me? I'm going to have to put this on silent, guys. There we go. And this comes in just below the completion of the AB equals CD pattern. So what I'll be doing is I'll be dropping one time frame lower. So just remember that these are the wicks. This is the price reversal zone. And just before I drop to the 60, what are the two things we're going to be looking for within the wicks, guys? Throw it in the chat for me. Let me know what the two patterns are that I like to see within the price reversal zone. Double top and head and shoulders, exactly. So we're going to be looking for the market to come up, give us a double top, and this will be one where I will sell aggressively on the second test. And the reason why is because the structure level. And that's where there was a difference between this and the Aussie dollar CAD. This is major daily or 240 structure. In fact, on the 60, the kill zone or the price reversal zone is still the same. And we had a couple of other smaller tests as well, historic tests. So this is one where I would sell aggressively, but we do need the rules to be met, so we would need the RSI confirmation as well. Now, with this being a big AB equals CD pattern, it allows time for head and shoulders to form. And I'm going to explain what I mean. Head and shoulders, it is extensions and retracements that appear in the market, but those extensions and retracements take time to form. Head and shoulders on the trading time frame. You might get one, Stewie. No, you wouldn't get head and shoulders here. I'll do it on the 240 and show you. First of all, you can all see here that we have room for a double top to appear. Okay. What I'm going to do is this AB equals CD pattern is a fibs based pattern. So that means we must play for fib based targets. Well, at least I do. For me, it's more profitable, the fib based targets. And I'm just going to leave the 382 on, which would be my target ones, which is just here. And just so happens to come into this level of structure. Now, if we was looking at a head and shoulders, we need certain things to happen. We need the market to come up to this level, and we need to see a retracement, and this needs to happen before we hit the price reversal zone. We then need to see the market go up, put in a new high above this level, hold the price reversal zone, and then there are two ways to work head and shoulders, guys, and I don't want to get a little bit too complicated here if people haven't done the educational material. Hi Marcus. And the first one is we can wait for our most profitable strategy, which is a move lower, which will violate this level of structure. That will then give us an initial structure low. It will give us a violation. This is an indication that we're going to see a rotation in trend. But look at what has happened. We have come very close to targets, and there is the potential that we don't get the market retracing. We could just simply come all the way down. So it actually leaves us very little room for the market to get this initial structure low and then pull back before hitting these targets. It's possible, okay, but it's unlikely. So what we can do is on these patterns, we're allowed to drop one time frame lower, and if we drop one time frame lower, it's going to give us a slightly different story. We could see the market come up a little higher first of all. We could see a pullback. We could see the market go higher again. We could see the violation just here. And now what you have is a lot more room for the market to not just carry down to hit targets, but pull back, get your entry reason, and then a chance to ride it lower for the head and shoulders. So there is, with it being on the 240, you can use the 60 at a push. You can even use the 15 if the setup is good enough. You might just want to wait for a little bit more confirmation. So you can see that the majority of the time with AB equals CD patterns, we get double tops. And the reason for that is because AB equals CD patterns appear all the time within the markets, but typically they appear on the lower time frame more because we get more candlesticks on the lower time frame. On the higher time frame, not as much, and so you don't get many opportunities with the head and shoulders. So double top in this instance is the main thing I'll be looking for. Of course, the other thing we can do is we can have a double top with a potential head and shoulders, and this is what I love to see. So we have the market that then does this. So it's indicating first of all that we're running out of steam by putting in this left shoulder, and it happens before we hit our price reversal zone, before we hit our wicks. Then we come up for the double top. We still enter in aggressively. To me then, that's just more than one strategy we're using. We're actually using the double top, but we're implementing, we have a good indication that we could also have a head and shoulders. So you can then do a couple of things. You can then wait for the violation of the double bottom. And what that will do is we could then see a pullback for a 26.18. So you sell the 61.8 fib. This has now given you your right shoulder, and you sell the market down to targets. So this is called a double-headed, and here's the double head and shoulders. That's the left shoulder and that's the right shoulder. And it means that your risk is this much and your reward is this much. Okay, so not only do you have a high probability trade, but you have something like a 2 or 3 to 1 reward to risk. So there are many ways that we can work these trades. 28 for around 65, so well, actually just over a 2 to 1 reward to risk. There are many ways that we can attack the market. Picking the right one is sometimes difficult, because sometimes you're going to wait for the pullback for the 26.18 and you just don't get it and the market comes lower. However, if you entered in here aggressively at the double top and the market just goes straight down, well, congratulations, you're in. And in actual fact, if you did that, you then got an even better reward to risk. So there's always give and take, guys, with strategies, with setups. Typically, if you're going to be waiting for your most conservative entry, you're going to have a poorer reward to risk. But if you're going to be more aggressive and enter in at the second test, you're going to have a better risk to reward. But there are things we can do that will kind of even out the playing field. And I think it would be, in a moment, a good example to bring over the pound New Zealand, which was, George, you'll remember this, that 180 pip trade I spoke about where I missed my entry. That actually went on to win for the 180 pips. Might be a good idea that I bring over that chart and show you what I mean. So we're just for a minute going to put the euro yen on pause, and we're just going to take a look at that and show you what I mean, at how we can mix the two together. And luckily I still have the workings out. So I don't want to delete anything, but we spoke about this in the last webinar, guys. This was a valid double top, but it was not one that appeared at a level of structure that I could take. So I wait for confirmation. I wait for a valid break below, close below of this structure level. And right here we have it. I then wait for a pullback into a 26.18, so from our swing high to swing low. I'm just going to leave the 61.8 fib on, and we can sell the 61.8 fib, and right here you would have been sold. Now the problem here is that your risk on this trade was around 100-120 pips, and I don't like the 26.18 by itself. The strategy is not profitable enough for me, but we can, because I've got quite an arsenal of strategies, I can then wait for extra confirmation. And because this is a higher time frame trade, it's on the 240, just like the euro yen AB equals CD pattern is on the 240. There's plenty of room for other confirmation to happen on the lower time frames. And do you see these two highlighted boxes here? This is highlighted the wicks and this is highlighted the wicks. And I said, look out for more rotation patterns within these two areas, because it will offer you reduced risk and pretty much the same reward. And if we go across, I may need to drop to the 60. Yeah, let me drop to the 60, because we're allowed to drop one time frame lower, just like the AB equals CD pattern on the euro yen. And it was this one, and I'm just going to go ahead and make this one a different color. I'll make it red for the kill zone. And as we go across, what we did right here, we put in a double top. So you could have used this aggressively, or if you wanted to wait, we had the violation and we then saw a pullback into another 61.8 fib. Now this would have meant your risk on this trade would have been around 65 pips, and your reward, if I just zoom out, as you can see it was hit, was 183. So the reward was still 180 pips if I'd entered aggressively here using the 240 2618, but because it was on the higher time frame and I knew that we could see rotation patterns in these two areas, I could have reduced the risk from 120 to 63, 65 and still had the same reward. So unfortunately, the reason why I missed this actually was the trading platform had issues. It was running slow and I had the IT guy working on it, and I just simply missed the entry, and I was dealing with other things at the time. I did manage to catch a 17 pip winner within here, and I was holding for second targets at 88 pips and I fell a few pips short, so I only banked 17 pips. But this just goes to show that when we have higher time frame patterns, there is absolutely no reason why we cannot wait for extra confirmation, because if it's on the daily or 240, we can drop down the time frames and we can wait for confirmation, and you had it. 240 double top, 240 2618, 60 minute double top, 60 minute 2618. So lots and lots of confirmation here, guys. Everybody follow that okay? Can you see the resemblance to the euro yen and the 240? What can happen? And on the 240 on the euro yen, we may not get our optimum entry. Okay guys, we might do this. I'm just going to clear this up a little. Just clear it up a little. Okay. I'm going to put the target back on. If it's up here, say, and we're playing for that 382, what if we don't get a rotation pattern? What else can we do to get involved in this trade if we do not have a double top or a head and shoulders? Throw some ideas in there. Doesn't matter if you're right or wrong, throw the ideas in there. There's no such thing as right and wrong. There is just ideas. What there is what's a more profitable idea and what's a less probability idea. Yeah, well done, Ian. Okay, a lower low, lower close. Okay, so this would be more of an aggressive entry. So we come into this zone and we simply then just put in, I'll make this green. You're gonna have to excuse me drawing. So this is one candle. There's another candle. Okay, that's not a lower close. Let me reduce that to there. Okay, so this candle has now physically closed and lower than that candle. Now to me, this is more of an aggressive selling opportunity, but if it meets your rules, but also you can wait for other confirmation as well. Don't forget, if we come up to this level, you may have the RSI confirmation as well. You may also have, along with this 15-minute lower close, something, this lower close on the 60, you may have something on the 15-minute. Now, just before we talk about that, Ashraf has also put in a 3-bar reversal. Yep, 3-bar reversal would be more powerful than a lower close. If you don't know what a 3-bar reversal is, it's all over the internet, just Google it. But I do have examples as well in the educational material. I've got some cheat sheets which tell you the different types of 3-bar reversals. And 3-bar reversal would be more powerful than this, because we typically see a momentum move higher, then we see a long wicked candle, and then it's followed by a lower low, lower close, giving us a clear sign that the market's running out of steam. What else? Advanced pattern. We could see an advanced pattern up there. Advanced pattern though would be bullish in this example. It would be looking at going higher. But break it down, think of trend. Let me drop down to the 15 and give you an example. So if we got that lower low, lower close on the 60-minute, which was an indication, but maybe wasn't good enough to take by itself, if we maybe did this. So we came up to this level, we saw a move lower, a pullback, and another move lower. What have we now just done? What type of move is this that we've just done? 1, 2, 3. This is a 3-point move. And what we've just done, yeah, Marcus, it's a 3-point move, exactly. And what we've just done is this was the outside return. I'll actually highlight the entire outside return. And again, guys, this is all in the educational material. If we violate this outside return, well, now we've just gone into trend with a 3-point move. Do we now have more confirmation? We've got a 3-point move on the 15. We've got a lower low, lower close on the 60. We've got the RSI confirmation. And look at what would happen here if we saw a pullback into this highlighted area, which is our outside return. We can then even be more conservative. You can look for another lower low, lower close candle, another 3-bar reversal. You could even now, as Marcus mentioned, look for an advanced pattern as your entry. So with the higher time frame, if the pattern is too big or you miss your optimum entry, don't worry. What we want to do, we want to wait for our highest probability entry, and if we don't get it, well, it doesn't matter, because we still have this much to go until targets are hit. And guess what? If we don't get any of these, we get no entry, and the market could then just simply blow right through, and you've saved yourself a losing trade. So there are some, how do I word this? There are traders out there that only like to sell the very highs or buy the very lows down here. But the journey is still tradable, because there are multiple ways. If the market is going to turn and come lower, the market is going to come lower. It's going to produce lower low, lower close candles. It's going to produce, well, majority of the time, trend. I mean, just look here on the 15. Move higher, outside return, move higher, outside return, move higher, outside return, move higher, outside return. Okay, it might not be doing it on the 60, so you've got no higher time frame confirmation, but you have an AB equals CD pattern, you have major daily structure, you have a 60-minute lower low, lower close, you have a 15-minute trend, you have a lower low, lower close. For the 15-minute, you've got the RSI overbought. It maybe came into this 120-300 psychological number. Maybe there was some internal structure level on the 5-minute which produced a double top, and we violated that double top. And yes, we're going from the 5-minute to the 240, but it does happen where we have all of the time frames sometimes giving you confirmation that we're going to go lower. And it's a story, it's just putting it together, and the trick is to wait until we have the most optimum entry that gives us a low risk, high probability, good reward to risk trade. So for me personally, I'm not a trader that will only look at selling the highs and buying the lows, I will look for the journey as well. And I don't want to get off topic, but now would also be a great time to bring in the winning triangle. Marcus helped me out. My memory is shocking. I look at so many charts on a daily basis. Euro, was it the Euro CAD? 1 second. And there is a prime example on the Euro CAD of how we had a higher time frame pattern, and I was more aggressive with the entry on the lower time frame for a breakout pattern. You guys may have already seen it. I don't think it was the Euro CAD. 1 second. I can find out. Curse this short-term memory. Let me go onto the website, latest trades. 29 pips. It was the dollar Swiss. Okay. Dollar Swissy. Let's bring over the dollar Swissy. Are you guys following me okay? Dollar Swissy. Okay, I'm going to have to make that the dollar Swissy and bring it over. Yep. Guys, do not be afraid to ask questions in here. This is not just a review of the currency pairs and opportunities. It's teaching, it's understanding what these violations are and how I personally look at the market. You can see that we broke out of this this pattern that we was expecting. So if I highlight the lows of the wicks just here, and I'm just going to highlight the wicks, can you see that we have a confirmed structure hold? Give me a yes if you can. While you're doing that, I'm going to draw out X to A to B, B to C. CD completion for a cipher was here. Now, cipher patterns are valid from the 786 all the way up to the X leg, as long as we don't, for me, as long as they don't close below the X leg, they're valid for me. And ciphers, I haven't tested on the dollar Swiss, so I don't know what the win rate is. But generally speaking, 70 to 75% is the win rate. Now, if we have an advanced pattern that has a win rate of roughly that amount, and we've held structure, my bias is that there is at this point a higher probability that we're going to go higher than lower. If I put a structure level on as well, if I can just get it right, if I put a structure level on here, what else do you notice? There we go, got it perfectly. What else do you guys notice? I'll give it a few, just have a drink of water just while you guys are checking out the chart and searching. What else is at that zone? Even handled number 9700. And what do we know about psychological numbers? They act as magnets and price is drawn to them, just like this. But what we also see is we see reactions from them. So here on the dailies, I can't trade the cipher because I've not back tested it on the dollar Swiss. I don't know the win rate, but I know that it's coming to structure and held structure. I know that even if this has a lower probability on the dollar Swiss, it will still be an indication that we can go bullish. We've got the 9700 psychological number and we're already seeing a reaction, and we've got the RSI that went oversold here at, I don't know, just under 20, so massively oversold. So right now, before you've even looked at the lower time frame, I would be thinking that this pattern has a high probability of going up to hit its first target, the 38.2. If you don't know what a cipher pattern is, it's in the educational material. BATs, ciphers and Gartleys are all free as well under the educational material. So we have, in my opinion, a high probability of coming up to the 382, and there is still around 113 pips up for grab. So we can implement the same things that we've been talking about. If we don't get an optimum entry here, we can look for entries on the lower time frame because we have a bias that we're going to go higher. Now I want to talk through the point I was going to make, and that was my trade. Here it is. So this is what I won on last night. It was a triangle. With a pattern, we typically have a pole, so it's a swing in the market. We had a move higher, and I actually posted this as a signal, so those of you that subscribe for the signals and took this, well done. We had this. So we had 1, 2, 3, 4, and I'm going to do this in real time. Now, if I put a structure level on just here, my concern is that we have not violated this level. So we can wait for extra confirmation. We can wait for the market to go higher, violate that level, violate the top of the pole, a pullback, and then get long. And just so you're aware, targets for me were at the 127. Again, guys, if there's anything you don't understand, just ask and I'll go over it, or I will explain it in a clearer manner. But what we did is, see this inverted hammer just here? I'm going to put a structure level on. Until we violate the high of that wick, we do not have a confirmed breakout. And if we do violate that wick, well, then I've only got from here to targets to go, and it's likely the market's just going to rally up and hit targets without me. Can everybody see that? This was similar to the Aussie dollar CAD, yeah, or the euro yen. And so what I waited for was the market came up. Okay, it violated the top of the pole, but we had no confirmed breakout, guys. Okay, simple trend violation rules. We did not violate the top. So what I want to be is a little bit more cautious when I'm getting my entry. What did we do? We came down and we held structure. Next candle, we also put in a higher high, higher close candle. So this was a lower probability pattern because we'd not violated that level of structure and we'd not violated the top of the pole. But this is where multi-time frame analysis comes in, and having a bias. Going back to the dailies, I could be more aggressive with the lower time frame because we had the cipher pattern. High probability we're going to see a bullish reaction. We had the RSI that was oversold. We came into a psychological number down here at 9,700. Was there something else? Was there something else on this one? Just let me check. Oh yeah, the 240. We had a big higher high, higher close candle. We actually had as well here another 240 higher high, higher close candle, and I actually got involved where this red candle is just here. It was actually trading down here. So having okay, Anthony, you can always catch up on the recording. These are recorded. So again, even though that was a lower probability trade, everything here was indicating that we were going to go higher. AB equals CD pattern there. It fell a little bit short, if I'm honest. But can everybody see then how we can be more aggressive on the lower time frame if we have the higher time frame screaming to us all these reasons why we held structure, psychological number, the RSI, cipher pattern, a 240 higher high, higher close, another 240 higher high, higher close, then a breakout pattern. And then on the breakout pattern, we held structure. So I got involved. It was only a one-to-one reward to risk, but it was high probability because of all the confluence. I'm sure I lost a few people there because we're really talking about multi-time frame analysis here. But this is covered in the educational material. And what I really hope, guys, is that you guys are going to continue with me within these webinars. Hopefully you're going to do the educational material, because all of these strategies that I'm talking about are explained with in a 30-minute video. So I've made them so that they're not too long. It covers the basics, but it's going to take time to learn those. But hopefully these webinars are going to help. So yeah, I hope I didn't lose anybody there, because we brought in 3 different charts just to show you how it works, and we're going to be implementing the same within the euro yen. We're going to take the 240 AB equals CD pattern, and if we don't get our double top, we're going to be looking for other entries to get involved, because we have the tops, which is our entry, but we have the journey. And the journey, there could be plenty of reasons to get involved within the journey down to targets. Well, I've done a ramble there for an hour. I do need a little bit of a break. Do you want 5 or 9 minutes? And we will carry on with a few more currency pairs. Yeah, brilliant, Stewie. It is good. It took me years to get to this level, but it's going to be a lot easier for you guys, because the educational material I've limited to roughly 30 minutes, and it covers the specific rules. I don't just talk about, okay, look at this, look what happened. I actually gave you my specific rules in there. Now, whether you choose to implement them or not is entirely up to you. I mean, what I would recommend is that you go ahead and backtest them, and put your own tweak on it, your own personality on it. But the bulk of the work is done for you, because I've physically given you the rules, and I've actually just shown you now. In these examples, I've given you the dollar Swiss, the triangle that won, how that won, and I also showed you the 180 pip winner on the pound New Zealand, and that's just proof that this works. So let's go ahead here and let's have a 9-minute break for the intro, and I will see you at 11:12.
Success means different things to different people. For some, success might be financial achievements, becoming a millionaire, for example. For some, it might mean accolades. For sportsmen, it may mean trophies, championships, or medals. For some, being successful might simply mean achieving a state of wellness, health, or happiness. Whatever it means to you, take note of these 10 habits of all successful people. They apply to any area and any meaning of success. Number 1, they set goals. You've probably never met a successful person who doesn't set goals, because the chances of you finding what you want without a clear target to move forward are right around 0. If you don't know where you're going, you will end up someplace you didn't plan to be. Setting goals should be the number 1 priority for anyone seeking success. Define exactly what it is you want, your end goal. Break down exactly what is required to get there. Mini goals. Make sure your why, your reason for doing what you must do, is strong. So when you hit those roadblocks, when things go wrong, as they always do, you have the strength and purpose to keep going. Number 2, they take responsibility for their life. Another key attribute of all successful people is they take complete responsibility for the success and the failures in their life. Unlike the majority, they never play the victim role. If something doesn't work out, they don't blame others. They learn the lesson. Learn one more way not to do something and move on quickly. Your energy is always best spent in the present and planning for the future. Your thought process should always be, how can I make this work? And what can I learn from this? Never living in the past or making excuses as to why you aren't where you should be. Remember, everyone suffer setbacks. Everyone has the opportunity to either blame others and circumstances or to focus on moving on and creating a better future. Regardless of what has happened, you decide what you do now. Number 3, they have great self-discipline. Discipline is a strong trait of all successful people, and it is one that can be developed with consistent use. Anyone that works from home or unsupervised knows the importance of self-discipline. When you are alone, will you choose to go through social media, watch cat videos on YouTube, or do something that will be beneficial for your future? It is much easier to have discipline if you have clear goals and a meaningful purpose, something that is much more important than meaningless distractions. Number 4, they are obsessed with self-development. You can't really claim to be successful if you have given up working on yourself. This doesn't mean you are never satisfied, just that you know it is human nature to want to grow and learn new things. Be open to learn new things and develop your mind through mentors, audiobooks, and reading. The more you learn, the more you will earn, financially and spiritually. Number 5, they read a lot. Reading is a common pastime of many highly successful people. The majority these days can't sit alone for 2 minutes without becoming bored, picking up their phone to go on social media, probably to post about how bored they are. Successful people, however, are almost always happy to be alone in quiet, to have the opportunity to read or listen to something that will benefit their mind and their future. If you're not a reader, try audiobooks. You can play them in your car, in the gym, or while you shower, and use time that might normally be wasted to gain new skills, new strengths. Number 6, they manage their time well. Time management is essential to success. Unsuccessful people usually get stressed and overwhelmed when there are too many tasks on their to-do list. Successful people are rarely phased. They prioritize the big payoff and most rewarding tasks first and leave the insignificant ones to last, knowing it matters most to do the most valuable tasks first. Successful people plan in advance, days, weeks, months ahead, knowing clearly what needs to be done to complete their jobs and reach their goals. Number 7, they take risks. If you don't buy a ticket, you can't win the raffle. If you don't take big risks, you can't achieve big rewards. Successful people know that there will be times they will need to take risks in order to get where they need to go. Often, most people won't take those same risks for fear of failure. However, the greater failure to successful people would be that of regret. Risk going for the life you want, or guarantee living with one you don't want. Number 8, they keep going when they suffer failure and setbacks. We all suffer setbacks. Every single person that attempts to live their dream life will suffer through failure. Many of them might even lose everything. Most quit. The successful never quit. They keep going, knowing their greatest character is formed in adversity, knowing their success story is being written in every moment. And it will be especially good now they have a comeback story. Number 9, they find a way to win. Successful people find a way, period. Whatever life throws their way, they deal with it, dodge it, smash through it. Whatever is required, they find a way to win. It's the whatever it takes mentality. It's the confidence in knowing whatever happens, I will give my all and leave nothing on the table. I will find a way to win. Number 10, they do what they love. If you're not doing what you love, you can't really claim yourself a success. Spending the majority of your working hours, also known as the majority of your life doing things you hate for money, is not successful living. It's torture to the soul. If you need to suffer doing something you don't like to get to a life you love, do that. But do not lose sight of exactly that. Your ultimate purpose. Find your life purpose. Think of all the things you love to do more than anything in the world. Then brainstorm how you can turn those passions into profit. Doing what you love every day. Even if you were taking a pay cut, it will be worth it. Do what you love every day, and you will never work a day in your life.
Okay, welcome back guys, welcome back. So, that was a lot of info to take in, wasn't it? And I'm not just talking about the 9-minute break video. This might be one actually where you go back and re-watch it if you didn't fully understand all of it. I think it was quite a good rant. If there's no questions, I'm sure there's a million, but feel free guys, if you don't want to post your comment on here, send me a DM. More than happy to talk to you on a one-to-one basis and explain it. I'm in a trade, by the way guys. I've been in this for an hour or two. This is the New Zealand yen on the 15. Did I unmute my mic? Yes I did, so you should all be able to hear me. Just a small trade this. We're looking about 8 to 10 pips for 15 here, playing a little double top. I'm going to run through the rules and why I've sold the market. Take care, Peter. You may have already left. Let's go and take a look at the dailies. I actually don't think we're going to get through all these currency pairs. I think we're going to run out of time, but let's carry on. So we will load that one. Okay. Empowering, Ashraf, isn't it? Very empowering. A lot of people may not have seen it because they're on a break, you know, toilet break and stuff. And hey, Cody, oh, you've missed it. You've missed it again. You're gonna have to get up earlier, buddy. So the trade that I'm in on the New Zealand yen. Let's from our most recent swing, we had a move lower, a pullback, a move lower, structure level on. Just here, and we had a break below, close below. A bit heavy, Mickle. I find it empowering. I listen to it a couple of times a week. It motivates me. What we did then is we saw a move higher. Remember, shallow violations, deeper retracements, and we are coming up into this level just here, which is the wicks, and we're currently up at that zone right now. So let's go to the 240. Uh, 10 o'clock GMT, so I'm not too sure what time it is your end. I thought you was usually up by 10 hour time. Are these starting a bit too early for you, Cody, in America? So look at what we've done here. If I just keep the wicks highlighted, I'm actually just going to put in 2 structure levels, one there and one there. And so we have right here a major level of structure, guys. So big rally up and a big reaction. For me, this is a major level. This is where I'm going to want to be looking for double tops or head and shoulders. And if we look left, we do have a little bit more structure. We have this, this and this, and I thought there was one more. Yep, just here as well, another major reaction. So not a bad place to look for a lower time frame counter trend trade. So let's drop down to the 60. Oh, on the 240, by the way, guys, pay attention, the RSI is already overbought at 86. On the 60, we're already overbought at 87, and that was on the first test here. Now, for me, it wasn't valid on the 60, this double top. It wasn't quite enough candles, so I took it on the 15, and it still needs to be valid on that trading time frame. So let's just go here. We still need it to be valid within the wicks. We've got the wicks all over the place actually, but that would be the highest point. And as you can see, it came into the kill zone, into the wicks. We held structure. We had one test, two test, and if I bring back on the orders, I got involved at this 3-bar reversal just here. Now it was a weak 3-bar reversal because we didn't have a lower close, but 3-bar reversal nonetheless. We saw a small pullback, a third retest, and it does look as though we're making our way lower. Now this is only a small trade, but you know, if it's high probability and it meets the rules, well, I've got an ATR above the first test, so the risk on this is just 10 pips and the reward is 15. So even though it's a small trade, I'm getting a very nice reward to risk here on a small trade. And you know, give me these high probability trades all the time. If this has got a 65% win rate and I've got a 1 to a 1.5 reward to risk, well, I'm going to take it every time. So why are my targets at this level? Well, right here, right at the top of this structure level. Even though I do think price can come lower, I want to be conservative. You know, I've got a nice reward to risk. I don't want it to be one of those trades that only comes to here, didn't hit my take profit and then reverses. So what I'm really looking for now is a violation of this level. That will confirm that this was a triple top. And if you're not involved, you could look for a 26.18 if we see a pullback and a chance to get short. So there is still opportunity there, but right now I'm in this. This was also sent out as a signal to those people that are registered as full members on the website. Cody, yeah, usually 5 a.m. I'm up. Little girl woke up a couple of times last night, so I got up a bit later. Yeah, Cody, it's my daughter's 13th birthday, so I was up extra early. I had to do my review, get things ready for this webinar. We had to open up her presents. Obviously, with it being her 13th, she got special presents and made a big deal of her. So it's been a long morning for me, and I got up at 3:30. I couldn't sleep. I had my alarms going off for that big trade that won for 130 pips. I'm just going to throw that in there. That big trade that won for 130 pips. So, any questions on the New Zealand yen? Can you see that the most important part of my trading is structure? And look, because we've got clearly defined rules in the educational material, it ensures that I only take trades that meet the rules. That keeps the probability up, and then we can look for our entry reason. We've done Aussie dollar. We've done Aussie dollar, Cody. You should have got up at 4. Right, let's get rid of the New Zealand yen. We'll keep an eye on this. We'll see if we can actually catch another winning trade hitting target, so we'll keep an eye on that. Let's have a look. I'm not going to do all these currency pairs, guys, because we'll end up running out of time. I'm going to pick the best ones. So we've done that. We had the dollar. Oh, the dollar CAD. What happened? 1 second. Marcus had. It was one of Marcus's trade ideas. He'd shorted the dollar CAD on a flag. Going to see, it didn't quite meet my rules, but we've now had the breakout. So okay, so flag pattern, guys. Okay, you're looking for a swing in the market. and I teach you how to draw out these channels and how to validate these patterns. Duplicate, move it up, minimum of 4 touches, 1, 2, 3, 4. We also need fibs. All this is in the educational material. We came into a 50%, it's valid. What didn't happen is, for me personally, it didn't come in to a structure level, which is what I really wanted to see. Okay, now I've taken flags before without this, but just in this situation I wanted to wait for more confirmation. In fact, while this was live, we had the RSI that went oversold. I was waiting for a double top just here because we had the RSI confirmation, and I talk about this again, don't want to repeat it, but in the educational material, how channels, how very often we have rotation patterns that appear time and time again, and we have them because we bounce off one side to another, and they appear all the time, and we can use that to our advantage, particularly in flags. So we didn't get the double top, we didn't get the retest before the breakout, but look at what we've done. We have actually now had the breakout and we're seeing the pullback. Okay, so we could now look for, well, a few things. The market could actually come back up for the retest just here. That could happen. I would actually prefer that because I would like to see this structure held, and then I'll use a lower close as the entry. So my risk will be something like this, and my targets will be a retest of these lows minus a few pips. Cody, there was a 15-minute head and shoulders on the Aussie dollar. Yeah, I have been monitoring it. We'll go back and take a look just after this currency pair. So I'm going to monitor this, guys. Just take a quick look at the higher time frame, why I'm not looking for extended targets. If I put a structure level in at where these candles close just here, and then the wicks, we're right down within this price reversal zone, so I'm not expecting price to come lower. So that's why I would not be playing for a fib extension. Those of you who follow me for a long time and know that I usually play for a 127, this will just simply be for a retest of the lows if we do get it. So that is the dollar CAD. Let's move that out of the way. Let's just go and take a look at what Cody's looking at, which is the Aussie dollar on the 15. Now we have already done this review. Let's go and take a look at the 15. Okay. You might be looking at this move higher. Looks like we're double topping up here. Give me a yes if this is what you're looking at. That would give you your head and shoulders, something like that. Now, this isn't going to be one for me, and I will just explain why. If we go to the dailies, we're looking really for rotation patterns at the very top of structure and in between the wicks. This is really where we're looking for rotation patterns, but I have taken them in the past within the wicks here. I have done it, but the lower probability. If we go to the 60, we're just about to ping almost overbought, but we are still moving bullishly. Here on the 60, the wicks on this level is just here, and we've barely tapped them. Okay. Dollar CAD yesterday. Okay, wasting everybody's time. Okay, ignore that. Okay, let's crack on with the next one. Okay, we won't bother with the Euro New Zealand. If you guys have got anything you want to look at other than mine, because the ones I have are fairly weak, just let me know and I'll look at yours. New Zealand yen, pound dollar. Let's do pound dollar. This is a very good opportunity that I've been waiting for a long time. I'm really hoping I get filled. So let's run through this. So as usual, higher time frame analysis, we're going to start on the dailies. She got the iPad Pro, Cody, for her 13th because she's a teenager. So very quickly, because we have run through this a few times, X to A to B, B to C, X to A to B, B to C, CD completion. Two advanced patterns. Targets for both of them are the 382. We have not hit those targets. There is room for this to go higher. Now what I was looking at was that we had had a swing in the market, a move lower, a pullback, a move lower, and a move higher. This is an indication that we could be putting in a head and shoulders. And I'm just going to throw that 382 back on, roughly there. Alright Stewie, again you can catch the recording. And so we can either look that the market is going to continue straight up, or we could see a retracement for this head and shoulders. What I liked was that we held this structure level and we put in a big lower, low, lower close. Now if we go to the 240, and the last webinar I said that up here, this right here was a valid double top. Now I didn't sell it because we had the bigger two patterns that were indicating bullish. So I waited for the market to violate this level, which we've done, and I'm now waiting for a 2618 trade, guys. And the reason being is because we're setting up for a sell for a head and shoulders, for a double-headed head and shoulders. In fact, I need to just let me make a note. I've got to do something on this when we're finished here. So alert. Okay, so I'm going to be selling aggressively the 61.8, and we're getting close to it now, because my bias is that this double top in 2618 is actually going to be a head and shoulders, because we've held structure, we've got a swing in the market. This is indicative of a pattern. Patterns typically have an X leg, and we typically see a swing within the markets. And I do talk about this quite a lot, guys, the difference between a simple violation or a trend rotation and what a pattern is, which is a head and shoulders. Hey Akil, just wanted to pop in and say hi. Welcome Akil. You've missed all the good stuff. You've missed the intro, the 9-minute intro that we did, which got everybody pumped up ready for the second half. So just to clarify this, and I do repeat it time and time again, head and shoulders is a pattern, and with virtually all the patterns that I trade, they all have an X leg, and they all typically have a swing in the market. And so this for me then is an indication that we could be seeing here a head and shoulders, but using the double top and 2618 as the entry. And it is different. If we didn't have the swing in the market here, this would for me just be a trend or a potential trend rotation. Okay, but because it's a pattern, it carries more weight for me, so I can be more aggressive. So I'm actually going to have a limit order here. I removed my limit order earlier, but that would be my risk. Now, obviously we have the bat pattern and the butterfly that we just spoke about on the dailies, and we've come close to targets here at the 382, but that doesn't mean that we're going to rally straight up and hit them. Based on this setup, I believe we're going to see a retracement, potentially to the left shoulder, and from that point we could then see the move on up. So just to work this out then, for the reward to risk, this would be your risk. Your stop would go an ATR above the high. The reward, well, let me clear it up. Okay, this is our double top. I like to have the charts nice and clear. It's easier for people to follow along, and it ensures that I don't make any mistakes. So if I aggressively sell just in front of the 61.8, I'm looking at stop loss up here. Targets. Well, obviously targets are going to be a little bit difficult here, because if overall the higher time frame is indicating we're going to go bullish, we want to be conservative with our target taking if we're selling. So we can do a couple of things. If we go back to the dailies, if this is a head and shoulders, we typically see a pullback to the wicks. We typically come down to test the closes of the candles. So the very tops here is where I would look for targets. But for me, the highest probability head and shoulders that go on to hit targets is when we complete an AB equals CD pattern. And so we draw from our highest point down to this level, we duplicate it, and we move it over. And if we just tap the 618 and we reverse at that level, our AB equals CD pattern is going to complete just above the wicks on the dailies. Also pay attention to the fact that we do have a 12600 psychological number. And if we look left for structure, I'm actually just going to put in a structure level just at the completion of this AB equals CD pattern. It actually comes within this level as well. So it's within that zone. From looking at structure, we could actually push it a little lower to maybe this structure level here. Certainly the 12600 acts as magnets. However, I have seen time and time again these head and shoulders literally just tap the completion of the AB equals CD pattern and reverse. So for me, that's what I'm going to be doing. I'm going to be taking targets in front of this AB equals CD pattern. And if we look at the reward to risk, we have a very nice reward to risk here. So we're risking something like 63 pips and around about 120. So a nice 2-to-1 reward to risk. Now we've actually spent the first hour talking about waiting for extra confirmation and increasing the probability of the trade. Because this is on the 240 time frame, we may not want to be aggressive here, because 63 pips is a fair amount of pips to risk, even though we have a 2-to-1 reward to risk. And if you want to be a little more conservative, we can wait for multiple things up here, guys. What could we wait for up here which will give us an indication that the market is running out of steam and potentially seeing a rotation? And guys, just give me a yes if you can still hear me. My YouTube is having a whirly sign, so I'm just going to refresh it. Just give me a yes if you can still hear me okay. And please remember there is around a 15-second delay here. So Asan, yeah, we'll have a look at the pound Aussie shortly. Yeah, nice and clear. Okay, so lovely. So like we just did in the other currency pairs, we can look for the market to run out of steam. So give me some clues, guys. What would be an indication here that we're running out of steam? Let's start off with something simple. Let's look at candlestick formations. What type of candlesticks would we see here if the market was running out of steam? It can be a candlestick formation, or it can just be a single candlestick. Give me an indication. Pin bar, 3 bar, another double top, exactly, Cody. And we saw that, you may have missed it, the 180 pip winner on the pound New Zealand, where we used multi-time frame analysis and looked for rotation patterns. Because it was a bigger, higher time frame pattern, we could drop to the lower time frames. In doing so, we want to be more conservative when we drop down the time frames, but there's absolutely no reason why this level here, these wicks, can't produce another rotation pattern, another double top, allowing us to reduce the risk, giving us a double top or another head and shoulders, 3 bar reversal. Well, if it's going to be a 3 bar reversal, we need to stop in the same place, don't we? Because unless it's a rotation pattern, and remember, a rotation pattern tells us that we're reversing from that point, so it means we can have very tight stops. If it's anything else, like a 3-bar reversal or a doji, we still need our stop and ATR above the highs. Okay, it is the safest place to have it. We can also start to arch. Have you seen this? Seen these before, where we just see the market come up and slowly arch and just put in pin bar, pin bar, pin bar, indication the market's running out of steam. Don't forget to check your RSI as well. So there are lots of things we can do there. But right now, I'm going to be selling that aggressively because we've set up the double top, the 2618. It's set up a classic head and shoulders for me. And just remember, guys, in the night, those of you that got the trade signal, we had the exact same setup where we banked 130 pips in the night. Same setup as this, left shoulder, double top. The difference was I got involved at the double top. Now in that scenario, we never got the pullback for the 2618 or the right shoulder. So that was the difference. So that's really what I'm paying attention to on this. Did anybody, by the way, sell this double top? I did shout this out in the last webinar that this was a valid double top, but I gave my reasons as to why I didn't sell, because of the big back pattern, because of the butterfly, and the fact that we was 80 to 90% of the way to targets. But if you took this double top, well then congratulations, because you would have hit your targets down here. Did anybody take it? And I'm just going to drop to the lower time frames while I wait for this 15-second delay to kick in. Cody, yeah, have the 127.40 psychological level looking left, also with that structure level, yeah. And if we look here, guys, and again, this is basic reading of structure. What we did just here, we double bottomed, and we've just gone over this in the first part of the video. Right here, this candle, what has it just done? If this was the top of our double bottom just here, what have we done? And I'm going to leave my crosshairs on. What have we now just done? Again, guys, if the room is moving a little too fast for you, we've lost quite a few people now because we've been going nearly 2 hours. But yeah, violate. We have just violated. So double bottom we know is indicative of a trend rotation. We've had a confirmed violation. So this is now an indication. That's all it is an indication we're going to go higher. So that's why I'm very shortly going to go back on and get my limit order set. So any questions on the pound dollar? If there are none, I will move on to the next currency pairs. To be honest, guys, we're running out of currency pairs. I think the last one we'll do is we'll take a look at the pound Aussie. See the New Zealand yen trade, we're just holding that level. This double top, triple test now we spoke about, 10 for 15 pips. Let's see if we can get this thing spiked down and catch a recording here. A winning trade, should I say, on the webinar. I do also just want to check the dollar CAD. Remember, we was looking at that flag pattern. It's not as yet given us an entry, so we're going to keep an eye on that. While I'm waiting, just let me set my order on this pound Aussie trade. I'm going to end up forgetting it otherwise. Through doing these webinars, you do end up forgetting things. So okay, all right. Cody, you like the 2618 also? Yeah, to be honest, 2618s, Cody, are for me low probability trades. I don't trade them by themselves, but I have shown through the course of this webinar that when you apply it to different situations, to multi-time frame analysis, to other strategies, and I did say that, you know, I have 14 strategies that I've probably spent 6,000 to 8,000 hours back testing and simply watching the market. It's allowed me to gain better rewards to risks and more opportunities, and so I add the 2618 to those strategies, more confluence. So Let's bring over the pound Aussie because somebody wanted to take a look at it. I didn't really have a great deal on it because we were sandwiched in between two structure levels. Okay, let's bring this back over. Has anybody got anything on the pound Aussie? Looking like we are seeing a reaction from that daily level now, so let's go over to it. So we predicted quite a few big moves on the pound Aussie, several moves that were over 100 pips, none of which I was able to get involved with, but I do have a bias on this trade, and I've got a bias even though we've got no confirmation of it. So from our most recent swing up here, we put a structure level on, we held structure. If I put, well, instead of a structure level, I'm just going to highlight the wicks. You can see down here, we've held structure. So we're sandwiched in between these two levels at the moment. Generally speaking, what we see is when we see a directional move like this, and a move up to a 38.2 level, and I'm just going to throw a fib on from our swing high to swing low, you can see we just tapped that 38.2. It's an indication that we may see a continuation, we may see a move to the downside. And I talked about the importance of forming a bias on a currency pair even though the market has not as yet provided confirmation, because it allows you to set up then trade ideas of what may happen, what might happen, or what might not happen, and ways you may be able to get involved with that market. So for me, if my bias is that we could see the market drop here, and we do start to see the market drop, my rule is I'm going to instantly drop to the 5 range, and I'm going to be looking for trend continuation. Okay, I'm going to be aggressive. I'm going to be aggressive because we're just violating a major level of structure, 2 major levels of structure. If we violate it with force, that's going to be the rule for me. But right now, what we're doing is we're within the wicks. So this is where we want to be looking for those 2 rotation patterns, guys. And repetition, throw it in the chat for me. Tell me what those rotation patterns are. And just while you're doing that, I need to go and reposition this kill zone, because the kill zone for these rotation patterns are the wicks. And they run from the close of the candle to the lowest wick, which is just there. So I do need to just alter this a little bit. Just like that. Double bottom and head and shoulders, exactly, rotation patterns. Now we're getting a reaction. Was this a double bottom right here? Was it valid? 1 test, 2 test. We did not violate the first test. Did we have the RSI confirmation? We went oversold with divergence. In fact, on the second test, we were also still oversold. So yes, this has met the rules in as much as it's come down into the wicks, into the structure level, and we've double bottomed. We've got a clear gap in between. This was a valid double bottom. This wasn't one I've taken. Let's go and take a look at the 60. And the reason we didn't take it, guys, just to explain, for me, I like to take them at the very lows. So this lower level here is where I was really looking at. But one is forming. So let's just check, is this valid on the 60? No, it's not valid on the 60. On the 60, we violated to the downside. So let's just talk about this then on the 240. If this is a valid double bottom, and remember guys, it's not valid until we violate the middle. Now this is a little bit awkward because here it looks quite nice for a double bottom, but we have this big wick, this big spike up here, which kind of throws out the look of this double bottom for me. And what it technically means is that until we violate this level, until we have a confirmed break above, close above, this isn't a double bottom. It's a potential double bottom. But if we do violate that level and we pull back, we can look for the entry, that 2618 trade at the 618. And again, we can be aggressive where we can set a limit order, or we can wait. This is the 240 time frame. We can wait for confirmation on the 60. We can wait for 3-bar reversals, rotation patterns, the market to run out of steam. We can look for what we talked about. We can look for a 3-point move, violating this level of structure. If we add that to the RSI and maybe a 240 higher high, higher close and a 15-minute trend, these are all signs that the market is rotating. So it's something to keep an eye on. What I do like though is this. So you've got the potential double bottom, but what do we have that's set up here, guys? It is a rotation pattern. Remember, patterns, we're looking for a swing in the market. We've got a directional move. We've got a pullback. We've got another move lower. This move lower here must physically close below the left shoulder. We are now seeing a move higher. If we were to violate this level, we would have a potential rotation, something called an initial structure high. And we can then look for our pullback, which just so happens to be the 2618 of that double bottom on the 240. Can everybody see that? Can everybody follow that we've got a potential double bottom on the 240, a potential head and shoulders on the 60, but we're entering in at the 618 on both. It's just adding more confluence because we have the potential head and shoulders with a trend rotation. And again, we can be as aggressive or conservative as we want. Now, targets, targets, where could targets be? As a general rule of thumb, whenever we see deep rallies like this, we typically see long extensions. Doesn't always come off, and if there's not a structure level here that you're happy about taking profits at, so for instance, this would be a level here I'd pay attention to, this would be the next level. I always revert to an AB equals CD pattern. It has the highest probability of completing compared to playing for structure or fibs or anything else. So if in doubt, I play for an AB equals CD pattern because it gets hit more often than not. So, and it just so happens that that AB equals CD pattern comes into this kill zone. We may have a 618 there as well. A little shy of a 61.8. Is there any psychological numbers? Nope, no psychological numbers there. Anything else? Nope. Nope. Okay, so no fibs there, no psychological numbers. We have structure in the AB equals CD pattern. Let's take a look at the 15. Guys, if there's any questions at any time, don't be scared, just throw them in. Or by all means, come into the chat at freeforexeducation.co.uk. Throw it in the chat there. We've got 2 chat systems. We've got one dedicated for Forex chat, one for non-Forex chat. And you can just direct message me or just ask the community. We've got 50 registered members. We've got around 10 to 15 people that are on there actively all the time. And so there are people that can answer the questions if I'm not available. Here on the 15, I have not a great deal, guys. Not a great deal. Let's go and check out the 5. I love the pound pairs because the ATR is so big that on the 5 you can still get good trading opportunities. Nothing here on the 5. Anybody got anything on the 5, guys? Okay, we've been going pretty much 2 hours now, guys, so I won't bother running through the other currency pairs. There wasn't really a great deal. Doesn't look as though I'm going to get my targets hit, because they are definitively going to get hit for my 15 pips. But we're pushing lower, you know. 15 pips is better than not 15 pips. Any questions, guys, before we wrap this up? If not, I'm going to say thank you again for joining me on the webinar. This one was longer than usual, but if you've only just joined or you haven't followed through some of it, we've gone into some very detailed technical analysis during the first hour and how we use multi-time frame analysis, 3-point moves, rotation patterns, flags, advanced patterns, and I gave illustrations. I gave 2 or 3 illustrations where we used all the time frames for confluence, so we managed to turn winning trades where we reduced the risk from 120 to 60 and the trader won for 180. So quite complicated that if you don't know how to read structure, so I'd recommend go over watching the first half. But if not, thank you again for joining me. I'm going to go and go get some food, go out for a walk, and then I've got my daughter's 13th birthday party this evening, so I won't be in the chat this evening, but I will be in it. I will be in it this afternoon. Apart from that, thank you. I'll see you on the next webinar.